special presentation is a debate on rebate. We are all familiar with the provisions of Section 87 capital A on tax rebate. Of course, you must keep in mind the very important amendment that was made by the Finance Act 2023 with effect from the current financial year 23-24, which will be relevant to the coming assessment year 24-25. As you are aware, the common perception in case of all resident individuals that has been going is if your taxable income is less than Rs.7 Lakhs and you prefer to be taxed under the new regime as per Section 115 BAC, then your tax would be zero. So zero tax on income up below 7 lakhs is the popular conception that has been prevalent. However, there is a myth. You need to understand, friends, that this zero tax on 7 lakhs, income up to 7 lakhs in case of resident individuals would be a correct proposition only and only if your income does not include capital gains, or if it includes long-term capital gains on equities, such gain is less than Rs.1 lakh. Let me try to elaborate as to how the scenario in regard to tax rebate and how the tax liability computed on incomes up to 7 lakhs of rupees can change by taking some real life case studies or illustrations, which I can best explain to you with the help of a very interesting and useful chart. So, let us first of all try to understand how we say zero tax on income up to 7 lakhs of rupees. Presuming that you do not have any capital gains, which is to mean that all your income is your normal income taxed at regular slab rates, say for example salary, interest, dividends, etc. In such a case, what would happen is your first 3 lakhs, because the basic exemption under 115 BAC for the new regime has been raised to 3 lakhs. On 3 lakhs, there would be no tax. On the balance 4 lakhs, the actual tax based on the 2 slab rates from 3 to 6, 5%, and 6 to and above at 10%, the tax would actually work out to 25,000. Section 87 capital A prescribes a maximum tax rebate of 25,000. So if your income is normal income up to 7 lakhs, you would end up enjoying zero tax on your taxable income. Now, with a view to have a clarity, what happens in regard to when income of capital gains creeps in under different scenarios, I have under this chart taken 3 different situations under 3 different provisions of tax relating to capital gains. Let us take a look at this chart and first and foremost, say for example your entire 7 lakhs, income is below 7 lakhs, but the entire 7 lakhs pertains to long-term capital gains from equities. What happens? You do get 3 lakhs as exemption, basic exemption out of this. Here keep a rider in mind that you should be residents and individuals. If you are a non-resident, the situation can be very different. In fact, we'll take up some time. The provisions in regard to the tax on capital gains for NRIs, can be very different because of certain special provisions. But we are not discussing that here today. We are talking of resident individuals. So 7 lakhs of your LTCG on equities, 3 lakhs is your basic exemption, 1 lakh you can take the benefit of not paying tax under the special provision contained as a relief under section 112A, because income, long-term capital gain up to rupees 1 lakh, the tax will be not chargeable under 112A. So 3 plus 1, 4 lakhs is what will effectively go as exempt. On the balance 3 lakhs, your tax payable at 10% would be 30,000. If you thought that out of this 30 you can take off 25,000 and pay only the balance 5,000, friends, you are mistaken. There is nothing in 87A, but section 112A clearly provides that just as you cannot get the benefit of 80 family deductions, what we call as chapter 6A deductions under section 80 family, this is clearly provided under 112A. It is also provided that no benefit of rebate under section 87 capital A will be available in respect of tax chargeable under 112A. So in this case on LTCG on equities, you would be required to pay full tax on the entire 30,000, as you will see in the chart. Take a situation where things will be different in terms of rebate. If your 7 lakhs, the entire amount is short-term capital gains. Now, if it is STCG on equities, in this case, there is a special rate of 15%. So you get your 3 lakhs exempt. On the 4 lakhs at 15%, you will be required to pay 60,000. But here, there is a shade difference as far as 87A is concerned, because under section 111A, there is no restriction in regard to tax rebate. There is only a restriction on 80 family deductions. So what will happen on this 60,000 which you are required to pay, you will get the full benefit of tax rebate of 25,000, and therefore as shown in the chart, you will be required to pay 35,000. If your total income is more than 7 lakhs, obviously you are not entitled to rebate even if you are a resident individual. So keep that in mind also. Now let us take the third scenario of capital gains, where capital gains are taxed under section 112 of the Income Tax Act at a flat rate of 20%. Now this is in regard to capital gains which arise from immovable property, gold, bullion and various other assets. Here also keep in mind there is no restriction under section 112 that rebate shall not be granted. So what happens? Out of your 7 lakhs, you get deduction of 3 lakhs for basic exemption. On the 4 lakhs, at the rate of 20%, your tax would be computed at 80,000. But the good news is, you would be entitled to a rebate of 25,000 from this, and therefore your net effective tax payable would be 55,000. So it could be 30,000, it could be 35,000, it could be 55,000, depending on what the permutations, combinations are. And obviously, if you have no capital gains, it would be 0. Now, these examples which I gave were keeping in mind the conceptual clarity that taxpayers can have in regard to the operation of the tax rebate provisions. If you have a mixed income of capital gains and non-capital gains, then you will need to apply these very rules and compute the tax accordingly, which can change from case to case. But I hope this debate on rebate will definitely throw sufficient light and illuminate, friends, to be able to understand this fairly complex calculation otherwise, where you could go wrong in your planning while computing your tax payable. And keep in mind, these provisions which we discussed are applicable to the current financial year 2023-24, assessment year 24-25. Thank you, and thank you very much. I hope you enjoyed this presentation.
Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.